How's it going, guys? Luke here from LAGFX. I just want to apologise for my absence last weekend. I was away with business, but nevertheless, I'm back for this week's Sunday sessions video. In today's video, you'll see me go over two of the pairs I'm quite optimistic about, and then I'll pass you over to James so he can run by his analysis and the setups he's got in place. The two pairs that I will be looking at today are the Euro CAD and the XAU USD pair. I'm liking the looks of these pairs this coming week, and I believe they'll be able to offer us with some brilliant swings and some profitable trades. If you do enjoy the video, don't forget to give it a like, and if you haven't done already, be sure to subscribe to the channel so you don't miss out on any other videos that we are posting. Now, without further ado, let's jump straight into this week's Sunday sessions video. So the first of two pairs that I'm going to be looking at today is the Euro CAD. And looking here on the 1 day time frame, we can see clear bearish structure straight from the offset. So we've got lower highs and lower lows being produced into the market. This is brilliant. This shows clear structural points in the market that we can play off. Now, as the overall direction of the market is bearish, we do want to be looking at those bear positions. So we want to be looking to sell into this market as we want to trade with the trend and not against it. So now that we've distinguished these lower highs and lower lows being put into the market, we can look to capitalize on the end of these retests. So where price retests to before starting its next impulse, that's exactly where we want to be looking to jump in. Now, when it comes to trading with a trend and you can see clear structural points being put in the market, the best thing you can do is enter in the direction of the market at the end of its retest and the start of its next impulse. So as you can see, this is clear bearish structure. Realistically, you want to be entering in at these points here. So where price retests to before taking its next impulse going downwards. Now, the reason why we want to jump in on the end of the retests and the start of its next impulse is because if we can enter in on a sell position here, price will fall straight into profit. Now, when it retests, it won't come above or even tap into our previous entry. Now, this is because these points in the market are protected. In basic structural laws, price wouldn't come up to break these points, as that would be invalidating the current market structure that's being put in place. So entering in on the end of these retests are great ways to capitalize on those swings. So now that we have distinguished the overall direction of the market, we are biased to sell into this pair. And because we now understand where we need to sell into this market, so at the end of those retests and the start of the next impulses, we can look to find those areas. So what we can do now is actually zoom into the chart and have a closer look at current price. So looking here, I can see swing highs and swing lows. This being a swing high, this being its swing low. This is its next swing high, and this looks to be the next swing low. So what you can do then is mark out these points as I have done here with the red boxes. So this is acting as a level of supply. This was once demand, but is now acting as supply. And then we have an area of demand lower down here that I've marked out from higher time frames. So now that we've marked out our swing highs and swing lows, and we've marked out the areas as well, it gives us designated zones that we can actually look to enter in on the market. So as we can see here, price has actually tapped into this level of supply and it's started to produce a bearish structure. Now, this is on the 1 day time frame, but we can actually see how it's produced us with a lower low here. What we'll do is we'll dive deeper into the market, looking at lower time frames, getting rid of that noise, making it easier to see more of that structure in the lower time frames. So now looking at the lower time frames, we can actually see that lower high that's been put into the market. That's great. That tells us that it's tapped into this level of supply here, and it's gone on to produce us with clear bearish structure. Now, this is exactly what we need in order to place our sell position. As you can see, this is the swing low that we highlighted earlier. So what I'm going to do now is get rid of this and get my rectangle tool and mark out this area as a point of interest. So now diving deeper into the markets and looking at this pair on the 1 hour time frame, we can see this clear retest that took place from the higher time frame structure, and this looks to be the start of its next impulse coming down. Evidently, we have clear bearish structure giving us lower highs and lower lows, and what we want to do is look to enter in on the next lower high that gets produced. Like I mentioned earlier, getting in on a lower high or the end of a retest allows you to capitalize on that next impulse down a lot easier. I've marked out these lower highs, or the ends of the retests, should I say, and you can see how price has fallen down and it has failed to break above this high here. This is great, as this confirms bearishness, and we can expect price to come down, breaking this previous low here, as this confirms bearishness, take its next leg up, fail to break this high, and take its next leg down. Now this is clear bearish structure, as it's producing lower highs and lower lows, breaking each previous low but failing to break each previous high. Hence why it is a great opportunity to jump in on those sell positions at the end of those retests. Now there are tools that can be used to find the ends of these retests, looking at ratios on the Fibonacci. So marking out the Fibonacci, the start of the impulse to the end of the impulse, it gives us our golden ratios, the 38.2, the 50 and the 61.8. So realistically, we want to see price be driven up into one of these areas. Now, as you can see here, we have a lovely tap into the 61.8, and then we have gone on to see this pair take its next leg down. So now what we can do is we can actually mark out the current impulse. So we can mark out the start to the end. Again, this gives us our ratios, the 61, the 50, and the 38.2. Now, what I like to do when I have these areas is draw a box around these 3 points. And I know that price has to come up into this box before carrying on to take its next leg down. So now that we have our area, I can draw our path. So I believe price is going to tap into here before coming down, maybe taking another leg up, and then coming down, and we want our take profit target to be somewhere around our point of interest. Now, in terms of entering in on this pair as a sell position, where would I be looking to enter in on? Well, as mentioned earlier, we want to enter in on the end of these retests and the start of the next impulses. So this marks the end of a retest and the start of its next impulse. This also marks the end of a retest and the start of its next impulse. So realistically, we want to be executing a trade somewhere within this point here. Now, suppose we get an entry, we would want to keep our stop loss just above the peak high. So if it was here, for example, we would want to enter in somewhere around here, keeping our stop loss just above the peak high, and then we would ride the take profit down to our point of interest. That way, our stop loss is protected by our peak high. As I said before, in structural laws, these highs shouldn't be broken without mitigating this area down here. Now, as price plays out, once the next lower high has been produced, you can look to move your stop loss forward or even start to trail your stop loss. What this will do will encourage good risk management and ensure that your position is safe and that you aren't going to lose any equity from this position. So now that I've been through that, we're going to jump over to XAU USD, and I'm just going to give you my bias quickly. I'm not going to do a full top down like I have done here and go into as great of a detail. I just want to show you my bias and give you a quick run through on exactly what I'm seeing. So moving over to XAU USD, I have done a full top down analysis. I have my overall bias on the market, the direction I'd like to see price going. Now it's about looking at where we can find specific entries and jump in on those positions. What would my overall bias be? Well, my overall bias would be to sell at this point in time. Now, assuming price fails to break above this would be a great reason to jump in on a sell position, and we can look to ride those sell positions down to previous levels here. So as we can see here, price is failing to break above. So that tells us a few things. There's probably a lot of sell orders waiting to be activated here. But on top of that, people have been closing those buy positions that they entered in on further down the line. Now, this will ultimately drive the price back down as those buy orders are being closed and those sell orders are being activated. Now, again, moving down time frames and looking at the 5 minute, we can actually see the start of bearish structure. Price seems to be putting in lower highs and lower lows. What we would want is a continuation in this, and we would want to see that build on the higher time frames. That would encourage price to come down and ultimately be the confirmation for us to jump in on a sell position. So there are two factors that I will put in place before entering, and the first one will be a break below this level here. but also to see price put in that bearish structure. So we want lower highs and lower lows being put in the market. And then similarly with our last pair that we analysed, we would look to enter in on the end of a retest and the start of its next impulse. This is exactly what I would like to see price do. And once this low has been broken here, I would look to enter in on the end of the retest and ride this all the way down. Like mentioned earlier, we would keep our stop loss above these structural highs. So you could have a stop loss up here to give you that ultimate safety. And you could have your take profit all the way down at your point of interest on the higher time frames. Now that comes to the end of my analysis. I hope you've enjoyed it. I've gone through the Euro CAD, given you my bias. I've done a full top-down analysis on that pair, showing you exactly how I go about analysing my markets. And then I have gone through XAU USD, being quite brief with my analysis, just to give you my bias quickly and show you the opportunities that I am looking to capitalise on. What I'm going to do now, guys, is pass you over to James. He's going to run through some of his analysis and give you his input on this week's market.
There's a few pairs that I'm going to run through. Firstly, starting off onto the euro to the US dollar. This is something I've been watching now for some time. You should remember that price tapped into a supply zone within this overall bearish structure that we were trying to follow. Now from here, we've consolidated a fair bit. We were, I think, just trying to manipulate the supply and demand balance, create liquidity, clear liquidity, introduce more supply, introduce more demand. It's pretty much just the smart money operators pulling that spring, trying to build liquidity, trying to build up enough supply to hopefully make that move lower. And I believe that after injecting the momentum here, they've let go of that spring and we should see price now continue to fall. There's a couple of things though that we need to be cautious of. Firstly, the fact that this was meant to be a protected high. Now the movement here, which came out off the back of some heavy fundamentals, what's happened is it's broken what was to be a protected high. Yes, since then we have started to break down, but that is an early sign that we are potentially breaking this bearishness moving forward. So what I've done is I've highlighted this potential demand zone just so that we can be cautious when price approaches this, because if that break of structure does mean we want to go bullish from now, this is one of the zones that we would look to be buying from. So if we do manage to get in on any sells in this region, which we'll go through in a second, then we probably want to at least partial, if not take a full close around this region, just with the expectation that price could reverse here, and therefore we should be implementing that knowledge into our risk management. So if we actually dive into what's happened here, it does seem to me like it is a distribution. Well, why? Because it's the stopping power of an uptrend and then the creation of a downtrend. So what we do here quite perfectly as well is building up so much liquidity. All of these highs are representing liquidity highs, and then we see this move here. It comes to blow through all of that liquidity. Now all of the people that were trying to get in on short positions here have been manipulated out of the market by this move. Through doing this, they have been able to execute a large buy position, clear liquidity, and then from here execute their large sell positions at the best possible price. That is why we've now injected the momentum, because the smart money operators, a composite man, has executed that large sell position that they're hoping to ride down. So looking into this, it could be argued that yes, there are going to be unmitigated positions within this. However, we do seem to have created a new structural point since trading lower. So I'm going to assume that this structural point is now the protected high, and therefore I have highlighted this region, the last buys before sells, as a supply zone, hoping to see price trade back up into here, alert us, hopefully find a distribution, and then at least trade price down into this demand zone. If not, we can zoom out and we can then pretty much create the expectation that price should come and fulfill this final target all the way down here. So we would be able to get a sell position, given that price played out the way that we wanted it to, with a nice take profit of around 260 pips. Obviously we'd be able to refine the stop loss as price played out, but if price was to play this way, obviously you see this is a very large and nice sell position which we could catch, making sure that we do partial here if price delivers this way. On the flip side, as I said, we may just trade down into this demand zone, start moving higher. So what we have done here is created an arbitrary situation. No matter what price does now, we know how we can tackle it. Either price is going to tap into here and we get into some sells, or price taps into here, we find an accumulation and we get in on those buys. Regardless of which one is delivered, remember, we need entry confirmation. And then if the trade plays out, if we are delivered that confirmation, make sure to manage that trade correctly. So I've now moved over onto the US dollar to the Japanese yen. This was a market we caught a brilliant sell position on. There's going to be a video coming soon for you guys. It's basically going to be a top trades of the week, where I'll just run through exactly why I caught this trade, how I caught it, what entry confirmation was delivered, how I managed it, so on and so forth. But moving forward, I'm expecting price to trade back up, filling in all of this market inefficiency, tapping us into this supply zone, therefore holding the bearish structure it's in, and then hopefully making those moves lower. Now, the reason I expected this is because we've tapped into a major supply zone. Since then, we began delivering displacements, protecting highs, breaking the lows. So I was just expecting, let's get in on the sales, hoping to catch it all the way down, but partially at major structural points. So if I zoom out now, you will see that I'm hoping to trade price down to at least this region where there could potentially be a demand zone. If not, we could even look to try and hold that sell position for a very, very long time, assuming that now we've tapped into this supply zone, we're ready to reverse the trend longer term, make those moves lower and start running all of these liquidity lows. If that's the case, it could be worthwhile if you do manage to get in on a sell position, just to hold maybe 10-20% of that position. Longer term, it's just a decision you should make. You are going to be charged for holding the position that long, so you need to decide, do you want to be a long-term hold like that, or would you rather just close the positions and keep finding re-entries along the entire move lower? Okay, so now moving over to the Aussie dollar for US dollar. This, again, something I've included many times now, so you should understand, if you've been keeping up with the videos, exactly what it is I've been watching for, exactly how I've been wanting to tackle the market. So this was a previous lower low in the market, price traded up, mitigate supply zone, next impulse down, breaks the previous low, putting in a lower low, confirming that bearishness is still to come. Price trades back up. We had delivered a false reversal. However, because of correct risk management, we were still able to profit from sales in this position, taking partials, moving stop loss, ensuring it was risk free and allowing ourselves a good return from the trade. As you see though, price did begin to trade down. However, it did want to come and mitigate this position higher. It's just done that. It's tapped in and has started reversing lower. Therefore, I'm hoping to be able to catch some sell positions, riding it all the way down to this final target, continuing the bearishness that we have been continually delivered. Because we've had no signs at all of this being broken yet, we can assume that the bearishness is still here. The bearishness is going to continue in the near future, and therefore we want to be a seller in this market. Just to zoom in, similar to the euro to the US dollar, we have this high created, we then come down, we displace this swing low, which as we know is early confirmation of a reverse in trend. We then trade back up, setting in a potential new lower high in the market. Yes, we can argue there's unmitigated positions here, but now that we have created this point, all we need to see is this low broken. If that low is broken, we can then make the assumption that this is the protected high and that we don't want price to surpass this level, quite simply. So put it simply, if this break of structure is delivered, we would then look for price to reverse back up, mitigating the positions up in this distribution that caused the fractal market reversal, looking to find sells, and then as I said, we would ride that down all the way to our final target or the previous low, which is a nice move lower. Given we are able to refine a stop loss, the RR returns could be crazy on this. Now, last but not least, the Bitcoin market. If you remember, I said that I believed a wider scheme reversal was coming our way. We've had the displacement of this high, which to me confirms we are going bullish now in the near future, hoping to put in that next swing high in the market longer term. So what I've done, I've identified the last major sells before a heavy buy or a heavy rally. We have some market inefficiency in here, hoping to see price slowly trade back down into here, find an accumulation, enter in on those buy positions, taking price all the way back up to the top of the trading range. If we move in to what price has done as of recent, we can see that price has slowly began trading down more suppliers entered the market. It's struggling to push up. We've had some displacements. We see price now breaking down. So in terms of this week, we are probably going to be able to just keep catching some short positions, trading price down to at least that 39,000 mark. And then when we do get there, we then flip our bias to then confluence with the higher time frame analysis we've done. So shorter term, look to basically just sell price down into this region. Once it taps into this region, looking for the accumulation, and then looking for those longer term buys to take price higher. So that is going to conclude this week's Sunday session video. We hope you have enjoyed this. We hope that you can take the analysis we've done for you and some of the predictions we're looking at in the coming week into your own markets, do your own analysis, and hopefully profit from some of the information we have given. Of course, none of this is financial advice. It is us quite simply giving you our point of view on the markets using our own strategies that we have spent a long time learning, a long time backtesting, proving to ourselves that it's profitable before taking to the real live markets with real equity funds. Regardless, if you have enjoyed, please leave a like, leave a comment. Any feedback is highly appreciated, and we will see you next Sunday when we're back here giving you our analysis on the next Sunday session video.